There is an old but common saying: if you cannot beat them, then join them. Now, this can be applied to many areas, including protecting your business, your family, and yourself from financial loss. Now, to demonstrate this, I have a diagram behind me I will be going over here shortly. But let's consider one of the oldest and longest standing organization on the planet, the government. How do they actually protect themselves from financial loss in terms of an economy and any kind of economic downfall? Well, they have taxes, right? So let's look at how taxes work as a form of governmental insurance and how this can be applied to your personal life, your business life, of course, and yourself. All right. So at the top of the food chain, in terms of taxes, we have the government. And I can probably write that so we know what we're demonstrating here. Okay. Now, when it comes to taxes, we have the government. This is where the risk, and I can write risk here. This is where the risk ends. The risk starts at the bottom and flows upwards, right? So the government takes the risk and now spreads it between individuals and businesses. Hope you like my briefcase. I think that's pretty good. That's what a briefcase looks like, right? Now, the individuals and businesses the individual might take that same risk and spread it across their household, the rest of the family, right? And everyone is now paying funds, working, whatever, to that individual. That individual now pays a household, a land, property tax, whatever tax it is, up to the government. Now, the government receives the funds. The risk, again, from the individual level, the business spreads the risk to its employees by, of course, all employees paying taxes. Now, we can say the government really is the one that dictates the spread to all individuals. But a lot of times the money passes through these different levels before it hits the hands of the government. Now, what does the government use this money for in order to protect itself? At least what they tell us they're supposed to be using this money for, right? Am I right? So now the government establishes systems, right? Systems in place. Now these systems fund, and ignore my little wheel here. I think I did pretty good on the system wheel, but it's pretty bad too at the same time. The system now establishes programs. So examples of systems are like your education system, your health care system, the tax system as well. So now each of these systems have different programs, whether it be student loan forgiveness program, right? In terms of the education system, different programs with this new big beautiful bill is out there when it comes to maybe writing off your full car loan in the first year of purchasing the car, right? And things like that. Different programs are now established through each systems, and then of course it goes down to individuals and businesses can access these programs. So that's the government way of taking the risk and now redistributing the risk down to the individual and business level. Now, how does this actually translate to our personal life, family life, and business life? Well, same way the government is insuring itself, insuring the economy, right? It is a form of insurance. That's what taxes is, just like Social Security and a lot of all these other governmental programs, right? We already know the stuff like Medicaid and all of that, right? So now you can privatize your own family, business, and personal life when it comes to risk. The community, these private companies allow for you to take the same funds and pay into a program or a system. The system is insurance, privatized insurance. the programs, or whether it be life insurance, health insurance, or even car insurance. A group of people pay into it. The, the company now, the system, takes that money, whatever they do with it, invest it, all those things, and now also spreads that money through a program. Let's call it life insurance, for example. Spread that risk across, you could say evenly or unevenly, distributes that risk across different programs. Now, it's supposed to be evenly based on age, health. Your premiums might be, how much you pay is determined based on your age, your health, and different risk, right? How much of a risk are you to the program, to the system, and you get charged a little bit more. So all in all, it's supposed to be a pretty even distribution. Now, once that funds is distributed, now when a loss happens, one family gets paid out, a person gets paid out, claims are filed, and some people might not file claims. But when it's your time to file a claim, of course, as long as you meet the requirements, the funds is paid out, and not everyone is suffering that financial loss at the same time. So that's how the system operates. Versus everyone might be paying taxes, and if the economy goes down and suffers a financial loss, everyone is suffering a financial loss. That's why we have inflation and everything else that comes along with the economy suffering financial loss. So you do not have to like this video. You do not have to subscribe, but I hope you learn from it, right? Put your questions in the comments. See you next time, guys. Thank you.